But at 7 o'clock, the market and close orders, the first market and close orders hits the floor of the New York Stock Exchange. And obviously when that information hits, the dealers, market makers start adjusting the pricing. They have to start pricing in the market and close. So at 7 o'clock, the first thing you do is watch what happens. We've told you this before. We've done a whole classroom on this. It's called the MOC ignition trade. And at 7 o'clock, the MOC ignition trade was a very reasonably sized sell. I think it turned out to be something over $2 billion eventually. I can't remember the actual numbers, but it started to build all the way through the morning, the closing couple of hours. So remember, at 7 o'clock each day, we get the MOC numbers hitting the screens. And obviously at that stage, we want to try and get a read on that. We want to try and get a storyline at 7 o'clock. And then at 8 o'clock, and then through to 9 o'clock, we have a level that we can lean against. If the market and close orders seem to be increasing, then that requires additional sell-side pressure. But it also tells us the bigger the market and close orders, whether positive or negative, the bigger the read we get from the closing bell. Because obviously there was a very big negative market and close order position eventually traded at 10 to 9 and then through to 9 o'clock, of course. And yet the market and close orders, the first thing that happened after the closing bell was price rallied. Price rallied. Now that tells me that the big commercials bought all those market and close orders, because otherwise why the hell did the price rally right after the bell? That puts me into a very bullish equity price feeling. Now that's not a surprise because of the fall in inflation break-evens. With the fall in inflation break-evens and my bullish bonds, I'm thinking a more dovish approach by the Fed perhaps might be on the cards if the inflation break-evens guys are right, of course. Then, of course, a more dovish Fed, and because of the more dovish Fed, I am looking at long equities, long the market against the dollar, so long euro dollar, long gold, long bonds. And that worked out on every single marketplace. Every single marketplace. Makes a lot of sense? Well, that's why we got the kind of marketplace we got yesterday and today. Knowing what the big question is, the only question really, nothing changed in Ukraine. We've obviously had a few problems in the Brexit talks again with the Northern Ireland Protocol, with the Sinn Féin winning in Ireland. Of course, the demographic change the demographic, you change the country, right? Change the demographic and you change the country. Well, the birth rate of Catholics in Ireland is quite substantially higher than the birth rate of Protestants. And that's just factual. Simple as that. It's just factual. So obviously the Northern Ireland's nearly always been majority Protestant. And now Northern Ireland is majority not Protestant. It's not necessarily majority Catholic, but it's certainly not majority Protestant anymore because of the demographic shift. And because of that, you then get somebody like Sinn Féin winning the Northern Ireland Assembly vote as the biggest single party. And that obviously changes the whole nature of the country. Changes literally the whole nature of the country. So you change the demographic, you change the country, guys. Simple as that. As simple as that. Nobody can argue with it because it's factual. So welcome in, guys. Hope you're good this morning. In terms of numbers, very, very limited, of course, up to this point. It is Wednesday. And we did get the Chinese numbers. Now, the Chinese numbers popped quite hard, actually. The Chinese numbers popped quite hard last night. The CPI numbers came in at 2.1%. Prior was 1.5%. And the PPI numbers came in at 8%. Prior was 8.3%, but the forecast was for 7.8%. So definitely bullish Chinese numbers last night. That's what it is. As far as information this morning, the German CPI numbers came in at 0.8% final numbers. And next up, of course, the big one, 7 minutes. US CPI numbers, 7 minutes. US CPI numbers, the big one. We're excited. We're ready to rock and roll. And obviously, one of the things that we're looking at just now is the European read on inflation. And it kind of sits at a fair value read just now, doesn't it? So European read on inflation. You can see obviously the macro and the European inflation was again for a very bullish pop here, a very bullish pop on equity bonds. But obviously on a daily chart, that's whilst it's a little bit higher than where we got to, it has dropped off. It is seemingly in line with price, pretty close on a daily chart, on a day chart here, and that's obviously been valid from the London markets open as well. So yeah, seems a little bit fair valued just now. So I'm not really getting too involved in this at the moment. I'm quite happy to be on the sidelines, but I will be watching to see how this comes out. And if obviously it's a hot number, that's going to be bearish equities. If it's a cold number, that's going to be bullish equities, bullish bonds, bullish the market against the dollar. Okay, cold number, bullish equities, bullish bonds, bullish gold, and basically the same trade as we did last night. A hot number, then obviously the exact opposite, guys. A hot number, exact opposite. Okay, the numbers are due out in at 1:30. The CPI forecast is only for 0.2%. The prior was 1.2%. The core number at 0.4%. The prior of 0.3%. So get ready for this. It could be quite good. Could be quite exciting. Obviously, there's a lot of movability inside of this CPI number. Not so much the core, but inside the CPI headline, there's a lot of opportunity to get this massively wrong on either side. So when we get this massively wrong on either side, guys, we'll get a pop on this. So just be aware. Get ready. Rock and roll time is here. Let's see what we end up with. Let's see what we end up with, guys. Numbers are out in just 5 minutes. Excited? Well, we'll be excited if we get a big miss or a big hit, so we can deal with a big macro shift in the markets again after that expectation change.